live at the Traders Expo. So if you have a chance to swing by Vegas, the shindig's going to be that week. I'll be doing my live seminar with Peter Bain the 19th and 20th, right before the Traders Expo. So you can combine it into a trip. So some of my traders at my Vegas shindigs. Here's me with the president of Bellagio Hotels, Randy Morton. I like Bellagio. It's my favorite hotel in the world. If you've not yet registered for Forex Live Profits, I've got a special loyalty discount for you guys here. And by the way, it's not just for Forex traders, because I'll teach you a lot of patterns that you can use for stock and ETF day and swing trades as well. So this is my big trading shindig of the last 3 years. It's been 3 years since I did one of my live MGM Las Vegas seminars, and so this is the first time in 3 years I've come out of the back cave here to do a McMansion, I should say, 4,000 square feet here in the Rockies. Anyway, Forex Live Profits, only $600. It's $625. It's a bargain. It's a steal. I know it should be up at $1,200 or $1,500, but I make it at least $1,000, right? But two of us together for 2 whole days with over $1,800 worth of bonuses, and that is at forexliveprofits.com. Las Vegas Loyalty. Certainly like to see you guys there. You have my word. It'll be an outstanding, world-class event. I'll work my rear off for you as always, and me and Peter will be there to answer questions, do interactive table activities, not just some lecture, presentation, monologue type approach. I'm a former corporate trainer, so we do breakout activities. You team up with the trader next to you. Remember, I will say, you know, how would you trade this chart? And turn to the trader next to you, or you guys get in a small group of 2 or 3. That's how you professionally facilitate teams in corporate America. I used to do that for over a decade. In these events are also hands-on, interactive, live professional training, not just sitting there nodding your head as some guy's talking about chart patterns. That's not how you learn how to trade. It has to be interactive. We'll also be doing immersion coaching and have live market charts. And it's only $625, which is underpricing it. So that's because we want to get a big turnout. And so far, so good. So go ahead and register if you haven't gotten your spot yet for that. This is what my traders look like at my Vegas events. And yeah, I got my showgirls and my Brioni suit. Anyway, trading strategy of the week is going to be on dual breakout entries. And I'm going to teach you how to use that later in today's broadcast. Especially important at multi-year high rallies like we're seeing in the S&P and our NASComp and the rest of it. Make sure that we're looking at 2 different sequential entries, a first trigger and a second. And the trick is, or what you need to learn as a trader is, you should expect a lot of initial stops on the first small darts you throw at the market. It's the secondary ones that work out that make the money, or potentially make the money, and that's how you capitalize on your trades. Look at the best candidates. You put on a series or a stack or a rack of small-sized trades. Okay, maybe I'm in 8 or 10 trades. I start off 8 or 10 trades in a given morning or a given session, and out of those, even if I have a handful of them that do small stops or go sideways, it's the others that then continue that I scale into with position sizing that make it worthwhile. And we'll look at some examples of how to do that. But let's go ahead and get on with it. What's going on with our S&P? One of the things that I mentioned to my Breakout Mastery traders Wednesday night was the divergence. And I don't have time to teach you guys how to trade that. That's why you should join Breakout Mastery if you've not yet done so. But look, please, at the divergence here. This is a good professional trader's approach. I guarantee any good Wall Street analyst would know this. And how many of you knew this, though? Every time the S&P pivoted off of the 50 moving average line earlier, we had a rack of 3 times it did that in the first quarter of this year. Lately, though, it's been dipping all the way down to the 100 moving average, which means there's more weakness or fatigue in the market. So because of that, we have a different set of breakout trading strategies you need to apply in our current markets. And I teach how to do that in Breakout Mastery and in the live seminars and so forth. So make sure you register for that to learn. But I just thought I'd mention that to you as a quick tip. Did you notice that? Well, there's some differences in how you trade that. If we look at our S&P, let's set up our S&R levels for the upcoming week ahead. I do 1758 as R1 and 1775. So 1758, 1775 would be R1 and R2. Support one, never what's obvious, right? Wall Street traders and professionals like me, we're gunning for you, right? We're out there trying to take the traders, we run stops, we do things that we can to make as much money trading as we can. I trade solely to make, well, I trade to make money is the primary goal, I should say, secondarily so I can train you guys. 1730 is obvious support. You don't want to sell that. Everybody knows that. You have to think a little smarter than the average bear. So let's use 1722 as S1 and S2. If I pull this over, see how this bullish lower shadow has support at the 50 MA at 1680? We don't use that either. That's too obvious. 1722 and 1695 are going to be S1 and S2. What that means to you as a trader, or at least what that means to me as a trader, is I will start going to cash if we have two red opposing candles, and or if we get to 1722, I'll start fading my open long swings back to cash, and be all cash if we get down to the 1694 area. Okay, so that's how to scale out and also to scale in on the continuation plays at the resistance triggers. Okay, now let's take a look at last week's biggest winners. These are the ones that I told you guys long, and if you remember, if you took notes last week, which you should this week, every week, I know you guys, a lot of you do, I told you guys long on this day. So as we go through these next 3, 6, 8 charts, these are also good for the next week ahead as well, which is why I'm bringing them up, not just the look how great the professional knows how to trade type of things, but I want to give you guys some ammunition for next week as well. SAVE, really good chart. Let me blow this chart up so it's bigger for you guys. Anyway, SAVE, that was one of my picks from last week. I told you long on new highs. By the way, on any of these, a good safe basic or a good potentially safe basic strategy is put a buy stop order in it for practice paper trading use only at 50 cents above the current 15-day high, and just round if you want to. So here we've got, for example, SAVE, the 15-day high is around 44.3, so the long trigger would be where? Who could tell me? Who are the sharp eggs in the house? 44.3 plus 50 cents equals 44.80, right? Okay, a flurry of answers. Thanks, Martin, Eli, Muir, appreciate it. Okay, next up, SCTY. That was another one. Solar City. Solar's been hot lately. Boom. Pardon the pun. Solar and energy. And the energy sector has been especially strong lately. Not oil, but the solar sector has been really strong within energy. So anyway, SCTY was one I said long on new highs there. How much could you have made? Well, 12 points, right? 12 sticks. Up to 12 points. So anyway, that ran. Keep that on the radar for next week. Another runner from last week that I told you guys would be good was Constellation Brands. Nice steady uptrend continuation. I called it long for you guys last week here. If you'd taken that, it's up a point. Keep an eye on that one for the week ahead. Not the best of the charts, but still a good uptrend continuation. Next up, I like Tesoro because the 2-day price action has been especially strong. And this is one to add to your intraday or day trading list for the week ahead as well. See how good Tesoro is? I always teach you guys how to trade these bullish cup breakout continuations. See, a bullish cup, add 35 cents or so above the high for a day trade, 50 cents above the high for a swing. Anyway, wide range, narrow range Friday, right? So I teach my traders in my live trading the open room how to trade Tuesday, Wednesday, Thursdays because it's one of those days. In this case, Thursday was the strongest of the 5-day week. Okay, so Tesoro, really good breakout continuation. Next up, let's take a look at this one, UBNT. This was on the radar from last week. I alerted you to it. That continued to move up. Keep that on the radar for the week ahead as well. And I've got additional ones for you too. We've got a lot this week because it's such a rally week. For those of you who are new to being here, we're also going to cover Forex. We've had strength against the U.S. dollar, and the Cliff Notes is dollars weak. So looking for breakouts. I've got 2 of 3 currency pairs for the U.S. dollar to look at. We'll cover momentarily and also cover our ETFs and our E-minis. Anyway, WLL, which is Whiting P, you can see congestion Wednesday to Friday, but we'll see if it takes out new highs. Again, a good steady uptrend. That one's reasonably strong. That was a winning call from last week, as was FAS, one of our ETFs, the finance. You can see it's gone from my call last week. I said long on new highs there. That's only ran up 7 points for you. So that's done pretty well. And OIH was another long call from last week, and that gapped up on Friday, right? At a gap Friday. So keep that on the radar for next week as well. So last week, I had a huge percentage of my calls were winning long alerts. So no surprise in a rally market, but were you trading them? You know, were you doing well? I hope so. I know I like to trade. Let's take a look at our new picks for swing trading for the week ahead. The first up is our Magic Kingdom with Disney, DIS, on the spotlight. I like the fact that we have a bullish cup pattern here that took out new highs. Keep Disney on the radar. We have a gap continuation play back on the 10th. Well, that's nice. It got the party started, ran up a few points. Keep Disney on the radar, and let's see if Mickey's able to get a pair and we're able to take out new highs, baby. Next up, Facebook. I've been calling this long for you guys for the longest time, ever since the gap up. I have to go back to 6 months now. The gap up to the mid-30s, it's near doubled, well, up to 54. I've been calling this long for the last couple of months for you guys. I hope you've been on the right side of that. What I like about Facebook, and especially important, if you look at our daily candlestick, what is yesterday's pattern? It's a window, but yet we have a doji, right? Yeah, from Morley, right. So we got a doji there. We have a hammer here. It's hammer time. Ba, ba, da, boom. Took off to new highs. Gotta love this stuff. It's fun. I like broadcasting. I miss being in front of the camera. Can you tell? Because I'm right. I mean, look how correct I am in my calls. Anyway, I know this stuff. Anyway, take a look at this. This thing popped from 52 to 54. We'll see if it takes out new highs over the next whole number. Keep it on the radar if it's able to break and hold above 55 in Facebook for the week ahead. Okay. My competitors who are watching me are saying, holy crap, I can't compete with this guy. He's a great presenter, and he's a real trader, and he makes really great calls. So be an affiliate, okay? Because you can't compete. Anyway, I'm the best. Take a look at the minor gap continuations in KEY. It's a cheapie, but it's moved up strongly. And what I like about this one, if you trade, this is a cheap stock pick of the week, is KEY. It's ran from 11 to 1270. I like the uptrend continuation, so keep an eye on that one. I know I'm in and out of MGM lately this year because it's near doubled, right? It's went up to 20 plus. It's another one. Hey, MS, Morgan Stanley, really good continuation play. I believe that's Morgan Stanley. Anyway, gap up on yesterday's markets, sold down to support. Right, that's on a 2-day basis, by the way. That's an example of my 1, 2, 3 pattern. And if you saw my article yesterday at equities.com, we look at mid-range reversals. So we have a 2-day pattern. One of my traders, Lucy, told me about this one. You're right. Thanks, Lucy. You're right. That one did take off. So if you're out there, thanks for heads up on that one. Anyway, 1, 2, 3 patterns on a 2-day time interval often move strongly. So keep an eye on this MS chart for the week ahead as well. Next up, let's take a look at Western Digital, our not WDCX, WDC. Seagate's also good. Anyway, Western Digital has the strongest of the last week or so uptrend continuations out there, and you can see that it's taken off new highs, going from 62 up to 72, so it's a nice straight move up. What I like about this, by the way, it's neat. I've got this video webcam. When you're trading breakouts, and I told Lucy too, is that like the URI, I don't like things that do a sharp angle break that's near 90 degrees. It's just as likely, and I was right too. She'd asked me on the day that it had moved up, I told her it's likely to drop to the middle and continue. That's exactly what it did. When trading breakouts in our current market, you always want to focus on those that have a 30 to 50. I know it's price action trading at its best. 30 to 50 degree uptrend continuation. Stay away from ones that go straight up because they're weak and they're likely to pull right back down. Also stay clear of ones that are just barely grinding because the risk reward isn't there. You want not too hot, not too cold. You want right in the sweet spot, and that's why these 45-degree angles are a favorite among professional traders, and they should be for you guys too. So got that 45-degree angle breakout continuation plays. That's a good basic strategy, and if you pull it up on the daily candlestick chart, you can see a nice uptrend is up at 90-day highs off that moving average support line. So another good pattern to look at. Western Digital in play for the week ahead as well. All right, for our day traders, you wild and wacky kids, let's see what's going on out there. First Solar, boom, shakalaka. This thing took off 46 to 50, a 4-stick run. In street talk, a point equals a stick, just like in mini trades, a handle is a point. Anyway, did a 4-stick run from 46 to 50, and you can see that nice uptrend continuation. Remember, as I've taught many thousands of traders for many years, 35 cents above the previous day's high on a minor gap continuation run. This is a minor gap, right? Minor gap. Look, Mom, minor gap. Minor gaps, those are my favorite plays because they work. Anyway, minor gap continuation runner. Keep an eye on First Solar for intraday trading and swing trading opportunities for the week ahead as well. Next up, last but not least for our day trading SWK, Stanley Black & Decker did a big gap down, took a dump on Wednesday. It's a technical term there. Dropped a couple of friends off at the pool. Anyway, a big gap down from 90 to 78, so you got a 12-stick drop, but it's starting to bounce a bit. I don't like bounces. I'm a breakout trader, but the fact that it did a reversal into Friday's market tells me this may be good, not for swing trades. I wouldn't swing trade this, but I would day trade it because it's got a 3-point run. So keep an eye on SWK for possible day trading setups the week ahead as well. All right, next up, let's move to our ETFs. Like this one, if you want to trade the indices, if you're a new trader, maybe uncertain about trading, it's always smarter to just focus on small size swing trading, index tied instruments. The Qs are one way to trade it, but notice the range for your buck isn't as good. We got 76 to 82. That's a 6-point range. In QLD, we've got 74 to 86. Which is a bigger range. It's a, 12-point range. So you've got a double the range. You got better range in the leveraged multiple ETFs. So that's why when going long the market ETFs, exchange traded funds, I like trading the QLD instead of the Qs. So anyway, buying that on new highs in a rally, that's kind of the classic way to trade. If you're buying a mutual fund or an index or something, that's how you trade the indices. Major support is at 82 in this instrument. In my swing trades, I usually like to not let them go against me more than 1.5 points, 1.5 points. I play tight, so that's just something to keep on the watch list. The other one is ERX, and that's one of our energy. You can see it, like I published in equities, an inverse head and shoulders, right? Inverse left shoulder, head, right shoulder, upside down head and shoulder. Took out gap continuation, new highs. Remember, gaps usually continue in trend. Ignore anybody who says sell the gap. Morons. Gaps continue most of the time. And it's how professional traders trade, and so should you. Anyway, 85.50, keep an eye on that to see if ERX is able to take out new highs. After this, we'll look at our E-minis, and then we'll look at our Forex charts. Then I'll do my bonus charts for my live room members, and then I'll open it up for Q&A. Next up, no discussion of trading would be complete without looking at potential pivots for the inevitable time when the market will sell off. And it will sell off. Sometime soon it's going to pull back. Remember, I'm called the NASDAQ Nostradamus from one of my traders. Joe, thanks if you're still out there, buddy, for a reason, right? Whenever things look rosy, it's always, say, darkest before the dawn. There's a lot of dawn before darkness, too. Things flip up and down. So as the market's sucking in new money flow by mom and pop kettle and in the Midwest with their money, professionals are selling to them, and watch the market cave back down anytime now. This is a perfect time to sell to the retail people who don't know any better, okay, from a professional trader standpoint. I trade to make money. I'm in it for the money. Be real clear. I'm in it for money, okay? I trade to make money. The way I do that is a lot of small-sized trades that I then scale into, and then I tighten in trailing stops and flip to the inverse when things start to weaken. And so should you. So be ready for potential pullback / unexpected selling because of trouble in Syria and the Mideast and blah, blah, blah. The talking heads try and fish around to find reasons, or the government shut down. And so the market sold off. No, the market sells because there's more sellers than buyers. The market goes up because there's more buyers than sellers. Don't overthink it. That's as far as it goes, okay? If you ask any Wall Street trader, I'll say, yeah, that's it. You can't try and hang news events to reasons why markets go up and down. Why ask why? Be a professional price action trader. That's what we do. That's how you roll. So anyway, be ready for bounces in the short ETFs. I'm looking at 18 on the QID. These are my two favorite inverse ETFs right now, the QID and FAZ. FAZ, I'm going to use 27. If we recover that, technically the scale-in trigger would be right over 28, but I'm going to start going long if we get over 27 again, because that's a fade of this gap resistance area, right? A gap down, continued down, as gaps usually do, right? Gap up goes up, gap down goes down, gap down goes down. Just use that with anything you trade. Anyway, be ready for the short ETFs and tighten in stops on any open winning long swings. Don't be all out there late to the party saying, oh, my account's up and I'm so happy, let me go buy some more. Well, you should, as long as the market keeps going up, but be ready to get out the very first sign of an inflection, or 2 red candles on daily candlesticks for swings, 2 5-minute candles, or even 1 minute on the day trading. Make sure that you're playing it really tight in the current markets. All right. E-minis, great uptrend continuation. Changing channels here briefly for our ES, and then we'll take a look at our Forex charts. See, almost a bearish engulfment there. That is a bearish engulfing, right? I believe right here. For more on candlesticks, learn from my colleague Steve Nissen. He's also got his active investor course on sale through today, I believe. So you might want to get that. I highly recommend. Anything you can get from Steve Nissen, get. He's the one and only guy to learn candlesticks from. I do exceptionally well because I worked with Steve the last 12 years now. Learn from Steve Nissen only when it comes to candlesticks. He's the best and only guy I learned from. And I use what I learned from Steve. So if you're out there, thanks. Hey, anyway, back to our E-minis charts here. Let's take a look at what's moving on, guys. Let's use 1742.75 as our one. Just 3 ticks over the 1742. Move it up, make it go 4 handles or so before the first trigger. So 1742.75, okay. 1742.75. And I want you to use 4 handle moves in this market. 1746.75 for our number 2, okay. S1, let's see, we may get some chop and noise here. The obvious bad place to sell would be at obvious support, so we don't want to do that. That's late to the party. Let's use 17, and follow up for yourself. See how well these work out. Just watch. You'll be impressed. 1727.25. You have to always use slight offsets from where the I won't call it the dumb money, but where public traders trade is not where professionals trade. We always trade either a bit ahead of or a bit safely out of reach of the chop of where the public retail traders will trade. So you need to do that too. Don't be the amateur that gets sucked in by pros that loses your money to the market. And 1714 and a quarter. I'm going to be a little conservative. So 1714.25 and 1727.25. Yeah, it's S1 and S2. These are the obvious areas you want to trade outside of those. And apply that thinking. Be an intelligent trader. Think about if you were a Wall Street trader, if you're a professional trader, if you're an institutional money flow guy, a hedge fund, prop trader, whatever you're doing out there, how are you going to buy and sell in a way that capitalizes on where the unknowing retail trader does? That's how market makers and specialists, I'm sure, Ray, you know that, is you're working the order flow. You're trying to set VWAP, weighted order flow, and I don't have the time to go into the mechanics of it, but you're trying to trade at a place that's not obvious to the public. And the way that you do that is have offset triggers. And I teach you how to do that in my courses, but that's what I would use for the ES for the next week. So keep that on the radar. Now let's move on to our currency charts. For my Forex traders' benefit, let's take a look at what's moving. Weakness in the US dollar. It's the Cliff's Notes. Dollar's been weak. I'm still long the Aussie dollar, but let's take a look at what's going on in our charts. First, actually, that's my first pick, which I'm also long in, by the way. So disclaimer, I'm also in this, or disclosure, I'm also in this long because I'm a good trader. Anyway, Aussie dollar, inverse head and shoulders down here, took out new cup pattern continuation highs. Keep an eye on the Australia dollar to the US dollar in the week ahead as well for potential long continuation breakouts. Next one is the euro dollar. The cable's not quite so good. It's okay. Yeah, you can trade both. The euro and the pound are highly correlated, so as one goes, so does the other in general. But the euro dollar, I like the fact that it's up at new cup pattern high breakouts. Really strong move up on the 17th. You can see it's perched up here with a pennant pattern up near highs. Keep an eye on the euro dollar for the week ahead as well. I like the fact that we had a big strong spike in the ADX down here, the average directional index by J. Wales Wilder. You can see that I like to trade when days after the ADX pops over 30 in the Forex. And so you can see really good move up in that. The last one is curiously enough, not a real popular one. At least I don't like to trade this one too often myself when I trade Forex, but the Euro Yen. An unlikely candidate, but that one has done reasonably strong sequence of cup breakout continuations. 1 cup, 2 cups. Let's see if we get a 3rd cup's of charm in the week ahead in the Euro Yen as well. So those are my picks for the week. The best one's going to be Aussie, 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 hoi, hoi, hoi. That's what they say at the soccer games, or they call them football. The rest of the world calls soccer football, just for the benefit of the fellow Americans who don't know that. Soccer's big in the rest of the world. For some reason, it never caught on in America. Anyway, good, strong breakout in our Aussie dollar, so keep an eye on that one in the week ahead as well. All you have to do is get a few trades right and be on the right side of these things to do well as a trader. And you've got to have the intelligence to not only figure out where your uptrend continuations are, but figure out where are the charts. You know, of all the different charts out there, how do you sequence in? Let's say you're trading Facebook, and let's say you're long and right, and it's gapped in your favor, and now you're questioning, well, what do I do now? I'm in the money. It's kind of a gift. We have a hammer there that got a breakout, bearish upper shadow, pullback. Anyway, we got a nice move up. How do you scale in? Well, the strategy point for this week, I'm just about done here for you guys. Let me know if any questions too, okay? From a coaching standpoint, and one pro to another, one thing I want to encourage you to do is take a little more caution in your entries and treat your trading as though it's not single isolated instruments, but look at it as a group of trades, like a small mini portfolio, 5 or 10 instruments you're trading, whether you're trading, I don't care if you're trading Forex, you're trading stocks or ETFs, whatever you're in out there, I want you to look at it as a set or a rack of trades. Don't obsess over one instrument that you go deep in and bet heavy on. What you want to do is split it out into 5, 10, 15, 20. I've done as many as 308 trades in a given day. But, you know, splinter out your trades and then feed the ones that work out, right? Put more size into, whether it's shares, contracts, lots, whatever you're trading. Scale in and use more position sizing. It's a lot more about the math than it is the chart patterns. Now, one of the things that I wanted to mention to you guys is what I call trading strategy of the week. And what I want you to do is use 2 different entries every time you trade. So on a swing trade, it might be every 2 points. Maybe I buy 32.50, 20, 50, 100 shares. The next trade might be 34.50, okay, and so forth. I'm always thinking a step ahead of where am I going to manage the trade. And for those that inevitably just go sideways or chop back down, take a 1 or 1.5 point stop on small size. And that's how you keep your trades alive. You keep very small stops on a small array of or small set of trades, and then you scale in professionally on the ones that work out. That's good sound trade management. And for more on position sizing, you can learn from my MomentumDoubler.com course or my colleague Van Tharp. He's the originator of a lot of our multiple and position sizing strategies. So anyway, learn how to do that. Stay on the right side of your trades and trade these instruments that are moving and do well with them. You know, I really like the fact that we've got some outstanding charts to work with. And if I had to pick one out there of all the charts, that's my favorite. Solar City is, I think that's, Solar City. That's the #1 chart. Before I forget, let me do my bonus charts for my live room members. And this, for those of you who are new, one thing that I add to the broadcast each week is I purposefully obscure the tickers and do not reveal those publicly to all the hundreds of you here as a way to motivate you to sign up for Trading the Open, which is at http Trading the Open. Reassuringly expensive, the most expensive live trading room in the world, and look at the quality of my alerts. Look at my YouTube channel and see how I'll post last week's videos on my YouTube channel and the week before. You guys can see how well my alerts worked out in live markets. There's a reason, right? The best and worth every penny of it. Anyway, these is a bonus that I add for my live room members. This is one from last week that continued on. This is the only carryover trade from last week that I'd look at again for next week. There are a few reasons for that. This one is a very good chart. It's ran up nicely for you if you took it, so congratulations. Chart #2 is this one, and you can see this one, I like it, ran from 48 up to 53, so a 5-point run to 10% run in this one. Chart #3 This one, it's ran from 16 to 23. And so again, if you're a live room member, just log into the members area at www.tradingtheopen.com/members. And if you're a paid member, you can log in and see the identity of these very best charts, which I save exclusively for those of you who pay something. You cheap people that try to just log in for free every week. Well, that's cool. I mean, let me earn your trust by giving you outstanding world-class training, better than anything you've seen out there, and the best alerts in the industry. But at some point, it probably makes sense for you to register for my premium stuff, because there's a lot more detail and advanced tactics, and this is the tip of the iceberg. What you're seeing here is 5%. The other 95% is what I'd give in my courses and my live room and my alerts and all the rest of it. So you might want to think about why there's thousands of people who've trusted me over the years, and less than a 1.8% dissatisfaction rate lifetime in my business, unlike these other vendors who aren't even real traders, who sell overpriced hooey that doesn't work. I'm the real thing, and I give you guys great weekly training here, just as a good way to establish rapport, for you to get to know me. I guess the video is kind of cool, because I'm looking at hundreds of you guys face to face here. It's neat to see so many of you here. Anyway, this is chart number, survey says, chart number 4. Uno, dos, tres, cuatro, or ichi, ni, san, yon in Japanese. My wife's from Japan. She used to be an executive secretary for Prudential in Tokyo. It's a great woman. Been with her 14 years. Love Asian women. Anyway, I digress. I like all kinds of women, but I'm an equal opportunity player. I'm a former player. Anyway, this is chart number 4. I like the fact that it did a gap run on Thursday's market, gapped up from 76 to 78, ran all the way up to just over 80. So that's a nice 2-point run. This is a good start. One reason I like this chart is because the high volume on the gap. High volume minor gap continuations are Wall Street's biggest kept secret and best play to trade, guys. A lot of institutional professional traders like Ray. Thanks, Ray. It's good to know pros in the house. Anyway, that is chart number 4, and that's in the members area, I believe, right now as well. And this is chart number 5, one of the very best charts out there in the market. It's ran from 42 to 50, an 8-point, 7.5-point run here the last couple of weeks. Keep an eye on this one, all my live room members, and that's the identity that's in the members area right now, or if it's not, it'll be there after today's broadcast. All right, our spiders are up. The market's been strong. Help you guys stay strong in your trades. And one of the things that I hope that you do effectively, even if you missed out on some runs in different instruments, now's a good time to be looking at continuation plays, or if the market sells off, bounces in the inverse ETFs. Volatility is at an all-time high now. It's an outstanding, the rest of this year is going to be a great time to trade, except the last week or so in December is usually a quiet time. But between now and December 15th, probably a prime time to trade. So make sure you're learning from me, and those who know what they're talking about. Be sure to get on board with my Forex event with Peter Bain. Take a look at my free article I just published. Sent it in Thursday. They put it up yesterday, the same day, I believe. Anyway, really good charts. Look at this pattern, this 1, 2, 3 mid-range reversal pattern. I first started teaching traders that back in the early 2000s in my live room. This is what I've done in my own trades. I was looking for pivots off of mid-ranges. I don't do initial pivots. I wait until it goes all the way down to 50% or previous support, and then look for a hammer pattern or bullish engulfing in a candlestick, and then look for the bounce, in addition to the second trade, which is going to be its simply new high cup or smile pattern continuation breakouts. And that's how professional trades the market. So I hope you guys do well too. Let me see if any questions, and if not, we're going to wrap up. Swing Trading University is in design. It's in progress. I'm working on that. You can register if you want. There's a members area and a video with one of my girls in there, one of my models that I've hired to speak. Stacy's in there, and some videos I put up. Swing Trading Success coming up. That's going to be an inexpensive, under $100 webinar I'm going to do sometime in the next couple of weeks, so keep an eye out for that. Oh yeah, and also I would be remiss if I didn't remind you guys, I've got Breakout Mastery on sale for the next 12 days too, at breakoutmastery.com. You could see me talking to you here with a outline. You get a full year. Even if you missed the October 16th session, you'll get the recording of that in the members area and the month before. Plus, next year, October. So you get at least a full year, well, 1 year, 1 calendar year of monthly events plus 4 additional ones. So 16 webinars with plenty of Q&A time. And that's one thing that my traders really like about my coaching programs is, and it's a bargain too, it's just $797, right? It's not some $1,500 or $2,000 program, it's just $797 for me, a top industry guy, who's a real trader with proof, and you get 16 one-hour events. If you're a former Breakout Mastery member, you can renew or retake or get, actually it's not a retake, it's 16 new events, right, with me live, and there's a discount on that. So hit me up with the support ticket if you're a previous, you know how well the training went, right? You know, you guys know how good it was. You get a whole another year of courses coming up with the 16 events I've got too. So anyway, but the main thing is the Forex, which also applies to stocks. 2 days for $625, and we've got, what do I got here? We've got every single webinar I've done with Peter Bain, really good. We got huge turnouts. We got hundreds of people in these things total, and you get every single download in high-resolution Blu-ray quality, not these little itty-bitty fuzzy videos like my competitors have. It's 1920 by 1080 pixel Blu-ray quality video included. So that's over 1,000 in retail on those, plus coaching calls with me and Peter, plus photos and PDFs and a coaching follow-up with 3 additional webinars and, you know, completion and a $200 credit towards our future webinars too. So well over a couple grand worth of and one of my Forex DVDs and a course from Peter. So, and it's only $625. I mean, what a freaking deal that is. That's good. And no upsells, nothing else will be offered for sale. So anyway, register for that. Love to see you guys there. Yeah, my word, it'll be a great session, as always, an interactive training as well. So with that, let me flip it over to questions. I want to thank Stephen saying, Ken, just a comment, the Trading Gaps course was awesome. Have almost made the price of the course back, just trading real small and testing it since the course finished on Tuesday. Well, thanks, Stephen. I appreciate that. Let me know if I can use that as a testimonial on the site. I always like to get the social proof of you guys, because, you know, you shouldn't trust anybody in the industry unless, number one, they can prove, like I do with P&Ls, that they're a real trader, and number two, they've got video testimonials as well as hundreds of other testimonials from real traders that they've actually helped, you know. And to be careful out there. It's mostly a bunch of shenanigans out there in the industry, so be careful who you learn from. Only learn from real traders, or or the top industry professionals out there, where like the Larry Williams and Steve Nissen and Peter Bain and Kathy and Boris, and then some of the Tony Turner's great, and Van Tharp and Bennett McDowell, and some of the top guys out there. Doug Hirschhorn's great for coaching. He's coached a lot of the Wall Street top traders. A lot of wannabe coaches out there who are second stringers. Only learn from those of us who are top professionals, because it's a big difference in quality and strategic implementation and what you're able to get done. Make sure you're learning from people who are the real thing, not the wannabes, which is most of the people out there. Okay, let's see. Question from Mike about there is no 11 o'clock session today. Well, no, thanks. I'm saying good morning. Thanks for spending Saturday morning and sharing your knowledge. Glad to be of help. The thing is, I want to be able to demonstrate competency, okay, with the quality of my training here, and earn your trust, so that you then continue on with me in my. Oh yeah, I'm from SFUN. That's one I did not look at. Let's take a look. Nah. That's got that vertical uptick on Thursday and then a retracement to 50%, the 1, 2, 3 on a 2-day basis. May be okay, but I prefer, say the Solar City one, SCTY, because that trend is much cleaner. It's another quick tip for you guys too. When you're looking at price action breakouts for your entries, avoid haphazard charts. And by haphazard, what it means, I guess is a good name for it. Things that are up, down, sideways, gap up, gap down, gap up, gap down, sharp breakout, congestion, gap down. Avoid those. What's the story of buyers and sellers? Okay. What's the underlying authenticity of the story of buyers and sellers in that instrument? And you're looking for just classic, uptrend continuations. Higher highs and higher lows is absolutely the right way to trade. So buying new highs. I specialize in the upper right side of the chart. That's where I dance. That's where I play. That's where I do my magic, is the upper right side of the chart. I only get paid as a trader for being right on, so on, this is backwards, so it's confusing, on the right side of the chart. So continuation uptrends in the upper right side of the chart is the right way to play for entries and exits. And you want something that has a reasonably good 45-degree uptrend, not something that's up and then down in the rest of it. So visually, take a look at that. And the reason is because professional traders, we disqualify or qualify our trades based on the type of price action continuation, not just the day of a big move or day of a big gap, but over a 2 or 3 day basis. What's the story of that instrument's buy and sell pressure and the subsequent price action, whether it's on high volume continuations, if there's minor gaps that keep running on up to new highs, that's great. What type of pattern makes sense, and what's most likely to attract new buyers on the right side of the chart? Remember, your trading approach should always be, let's say, like it's a magnet. It's trying to attract new buyers after it's made its initial move. So as a trader, I'm always thinking about, how am I going to make money on the right side of the chart? Which charts on the left are most likely to attract money flow, institutional money flow? Not just home retail traders are asking about things that we wouldn't trade, but what's most likely to attract institutional money flow on the right side of the chart? Okay, and those are the type of things I teach you guys how to do in my courses, but that's what you need to know. It's kind of the big, important real trader's perspective, but you need to know how to do that. And for that, register for my online courses and live room and all the rest of it up there. And then I have the detail, the time to give you guys that. Hey, Rick is saying, hey, Ken, what's my secret for looking so young for somebody who's near 50? I think, I mean, I don't drink much. I don't take any drugs. I don't eat much junk food. I portion control. My wife's from Japan, which is a big plus, by the way. It's another reason I married someone from Japan. Is something that someone wrote on. Most of the comments on articles are usually, you know, the peanut gallery stuff, but something someone wrote really stuck in my head, which is that you don't see any overweight 90-year-olds. Okay, that one phrase just sticks in my head. You don't see any heavy set 90-year-old people. Everyone who survives to 80 or 90 is all thin, 100%. I've never seen a big overweight 90-year-old person. So that motivated me to, you know, to lose weight and to stop eating so much of the junk food, of the Heineken and pizza stuff I had in my 20s. That you can't do that. So eating right, portion control. I don't do as much exercise as I should, though I know it's something I need to do more of. Lots of water. Having a honest wife who I can trust, and living a life of service where I'm in service of you guys, where I can reach thousands of people and genuinely help. That kind of, you know, the mental background helps you stay youthful, and surround yourself with people and situations that help you achieve leverage and better success in your life. Thank you if you want. Same thing, right? So you can get the same chart. Anyway, you get a wide range day, often followed by a narrow range day. Or as I teach my traders when it comes to candlestick charts, you often get a wide whole real body day, pull it down to 3 month, a wide range day followed by a narrow range day. What do you see is the story of buying and selling Wednesday through Friday in the S&P? What are they telling you? What are the institutional guys telling you? And Charles, yeah, you're right. What are the institutional traders telling you? The talking heads in the media, which has a completely different agenda than you and I, as people are trying to make money in the markets, by the way, which should be noted, all right, is the market. The media is telling everybody, well, the S&P's at new highs and the market's rallying, blah, blah, blah. But us skeptical pros are saying, not quite so fast there, Sparky. What's the story of candlesticks? What are they telling you? It's a 3-line break, all right? Read Steve Nissen's Beyond Candlesticks. He's got 17 pages on 3-line breaks. Papa Bear, Mama, it's my saying. I'm a big Disney fan. I got a daughter, so I, you know, all about the stories. Anyway, Papa Bear, Mama Bear, Baby Bear. We've got narrowing whole real bodies of candles in the S&P. So that tells me market fatigue is setting in. So yes, we probably will have a pullback or sell-off day any minute now, Monday or Tuesday, right? Are you properly prepared to trade that? Are you looking for those kind of divergence clues in the markets? By the way, when it comes to things like divergence, especially like MACD divergence or Tom DeMark trend lines, learn from my colleague Peter Bain, right? When we do our Vegas seminar, he's brilliant. And you can use that stuff in trading stocks and ETFs. I do. Peter Bain taught me how to use these Tom DeMark trend lines, which was originated by Tom DeMark. And I use that in my stock and ETF trading as well as my Forex trades. So learning from good guys who know what they're talking about can be applied across markets, and I do. Anyway, what's the story of this? You see a big candle, a medium candle, a small candle. So the sequential story over a 3-day basis of buying pressure in the S&P is one of increasing price action or increasing index action in this case, but of decreasing sustainable strength, because there was a lot of buyers and not so many buyers, and now just a few buyers at new highs. So that's an inverse signal. And what do you see in volume? Tick-tock in the SPY. You have large volume, then narrow volume, and then this isn't lowest volume of all, but it's smaller volume than the initial breakout. And again, we have a small whole real body candle in the spider. So because we're not at new high volume on a 90-day candlestick chart in the spiders, which is the ETF that tracks the S&P, that also gives me reason for caution for moving into new longs on the week ahead, and instead I'll still play new longs because that's what I do. I'm a breakout trader, all right? But I'll do so on much more conservative size, and I'll do so a little more strategically and lighten up and be ready to go to cash at the first sign of trouble and flip to the inverse ETFs because of that story of decreasing volatility in the markets. And any of you institutional guys, you know that, right? That's what your in-house TAs, the tech analysts, will be telling you guys is the reason for caution with the SPY having declining volatility in the candlestick. So make sure that you're using that as part of a thoughtful trading management process or trade planning process for your upcoming week ahead as a trader. Okay. So I hope this has been of service to you. I've got 60 seconds left. Got a lot of questions. From Robert, trading the open is a live room. It's take a look at some of the videos on my YouTube site, my YouTube channel, I should say, or on the tradingtheopen.com site. You can see the examples. I'll post some new ones sometime in the next few days, so keep an eye out for those. And yeah, you're right, Rick, about the gigantic scam show that most in the industry are. I'm up in arms like you. Yeah, the thing is, just be smart. Test out the success rate, the authenticity, the professionalism, the competency of the free content, and compare that to anything else you see out there, right? So I'm deeply grateful to all hundreds of you for being or anything like that. Better to go in trend on the gap. For day trades, we're in and out 5 to 20 minutes, but for swing trades, anytime you're doing anything that's not a continuation play for a gap, so a gap down that's bouncing, that should be a 3-day round trip at most. And tighten in a trailing stop. I mean, if it keeps running, it keeps running. But in general, what I found in experience in real trades is usually the fade bounces will last up to maybe 3 or 4 days, and that's it. So use that as kind of a rule of thumb when you're looking for reversal plays. And right, Tony, about the pump in the market and can easily be dumped. You're absolutely right. So because of the declining size of the candles in our S&P, getting smaller and smaller and smaller, that tells me buyers are getting less certain as things are taking out new highs. And it may be, house of cards and collapse and sell down at any minute now. So put in tight trailing stops. Don't miss a big rally continuation. I don't say to be trade scared, but tighten in trailing stops and be ready to flip to the inverse, either shorting the market or buying the inverse ETFs at the first sign of trouble, specifically 2 red daily candles in a row in the S&P. And I tell any Wall Street trader, if I was on CNBC or any of the finance cable shows, I'd be telling them the same thing. So good stuff. Anyway, that does it for the time. I had meant to only stay here for 35 or 40 minutes, but so many good questions, I thought I'd stick around for longer. Guess that's it. So anyway, thanks everybody for being here. I appreciate it. I will see you in our next Saturday's broadcast. And until then, trade smart, trade well, and make your entries and exits count.